In the wake of Tesla's recent 3-for-1 stock split, stock analysts and investors have varying expectations. While some think that the company's stock may be overvalued, others are fairly confident in the future performance of Tesla's stock. Tesla shares for the past few months. Tesla has produced and delivered electric vehicles across its markets, recording both significant wins and losses. However, given Tesla's track record, a company must have an effective system in place for raising revenue and reducing costs and debts. The rising cost of living and the car company's inability to meet project deadlines are some factors that suggest the stock price may decline, but there is also a good chance that the company's stock will perform well in the upcoming months. But can we really expect the stock to rise despite the challenging market conditions? You're about to find out. But before we do, if you like this kind of video, don't forget to hit the like button and subscribe. Tesla has been frequently in the headlines during the past few months since it is a prominent player in the EV market. In the United States and many other markets across the world, it is anticipated that EV sales have increased by roughly 105% year over year. Following the 3-for-1 stock split, a number of stock analysts have increased the price of their targets on the stock. Web-Bush evaluation after the stock split, Dan Ives revised his price forecasts for Tesla shares from $1,000 to $306, citing the anticipated production ramp-up at the company's Shanghai factory as the reason. Additionally, future fund founder Gary Black set a 500 price objective for the shares. However, are these price targets realistic for Tesla? Keep watching to learn why the stock had fallen precipitously in prior months after the major production at Tesla's Shanghai plant was shut down in May. This was because the company was having trouble obtaining parts for its electric vehicles, which caused a number of issues at the factory. Tesla had anticipated increasing output to pre-lockdown levels by mid-May, but the factories were only able to produce 200 vehicles at the time while addressing the problem. Musk said that while he is optimistic Tesla can build a record number of electric vehicles in the remaining months of the year, the key may be outside of his control, and there is no guarantee that authorities won't impose additional limits. The stock price further fell after it was revealed that Musk had sold Tesla stock in August of this year. During his recent Twitter trial, the Tesla CEO sold 7.92 million shares of the business, valued at almost $6.88 billion. Despite Musk's later admission that he has stopped selling Tesla shares, there is no way to predict the future of the stock price, which limits investors' hopes that the stock will increase in response to news like Tesla's Battery Day. The 2020 event was organized by the manufacturer to showcase the most recent battery advancements. Tesla announced intentions to create a battery with a 1,000,000-mile range that could power an electric vehicle for its entire useful life. The 4680 cells are anticipated to lower Tesla's production costs and increase productivity. According to experts, Tesla could cut the cost of its current Model I battery in half by using larger cells and a dry coat electrode technique. With this new line of batteries, Tesla, which is already a market leader in the use of lithium-ion batteries in EVs, may be able to produce highly regarded EVs significantly more effectively than its competitors. The manufacturer wants to bring down the price of its cells to $100 per kilowatt-hour, which may someday put electric cars on level with vehicles powered by internal combustion engines. However, neither this event nor the announcement by the American car rental giant Hertz of its massive acquisition of 100,000 Tesla Model 3 vehicles resulted in any appreciable rises in the stock price. The stock price of the firm did increase, as predicted by Tesla bulls, but only briefly. In addition to adding Tesla models to its expanding fleet of electric vehicles earlier this year, the rental firm declared its intention to receive 100,000 Model 3s by the end of 2022. Additionally, Hertz struck a deal to provide 50,000 Tesla electric cars to Uber drivers. The company has been expanding its fleet of Tesla cars, which might help the company gain greater notoriety and attract more customers. However, despite the fact that Tesla's stock price only slightly increased following this acquisition, there are a number of additional variables and projects that could cause the stock price to increase in the upcoming months. According to Musk, one of Tesla's key goals for the remainder of the year is to improve its Fast feature, which is probably going to happen sooner rather than later. Tesla launched Beta 10.69, which has a number of noteworthy upgrades over the prior version. The car manufacturer then quickly produced a new version 10.69 on, which added even more capabilities, but that's not all. Tsla plans to release Beta 10.69 in September, according to tweets from Musk. He explained that this next and possibly final version still needs to be polished, and that even though it will contain a much smaller number of code changes, their effects on the driving experience will be significant. Additionally, he speculated that the advanced driver assistance software will likely be improved. Tesla intends to provide the updated beta to all of its 100,000 testers. According to Musk, the cost of Tesla's FSD beta software is $15,000 in North America, a $3,000 increase over the prior cost. What are your thoughts on this? Comment below and let us know. Tesla has been working to grow its 4680 battery output since Battery Day in 2020. This is an effort to enhance its upcoming model year automobiles and hit the 20 million EV target by 2030. Tesla has undoubtedly found this to be fairly difficult. The successful rollout of Tesla's 4680 cells is just halfway complete, according to experts, and scaling its dry coat electrode process presents difficulties. However, the EV manufacturer is still working toward its objective of using larger cells in its automobiles, and according to analysts, Tesla will probably still be able to use the 4680 cell dry coating electrode technique in 2019. In related news, despite consistently high delivery profits for more than 2 years and accumulating a cash position of over $18 billion, the automaker appears to be finally on the path to losing the junk bond rating and becoming a blue-chip corporation. Rating agencies like S&P Global Ratings, and Moody's Investor Service continue to grade Tesla as a junk bond, but this designation appears to be fading. Credit research by Bloomberg Intelligence Tesla is still making a ton of money, and Joel Levington recently predicted that these point rating firms will finally take action as a result. He continued by saying he wouldn't be surprised to see an upgrade to Tesla's investment grade occur before the end of this year. Needless to say, this is long overdue for the sixth most valuable company in the world, and although it may not seem like much to the average Tesla investor, it could mean that many large funds that frequently have a policy not to invest in companies with anything below an investment grade rating will do so with a higher rating for Tesla. Additionally, Tesla will hold its second AI Day later this year, and the automaker is anticipated to offer a number of intriguing updates and improvements. Last year's Tesla AI Day demonstrated to us that the firm debuted its Dodo supercomputer, which it billed as the world's fastest AI training device, in addition to the company's fully bipedal human robot, the Optimus. That had many Tesla investors very interested in what to anticipate from this new technology. Tesla hopes to finally provide an update on the Optimus project during its second AI Day later in September, despite the fact that it was first announced last year. The original date for this event was August 19 of this year, which was the exact day after the first AI Day in the previous year. Tesla had intended to have a functioning prototype of the Optimus robot by late September, according to Musk, who later stated that the timetable had been delayed to September 30. Tesla's humanoid robot is ready for release, which will greatly improve the company's revenue. Additionally, before the company's Q2 earnings were disclosed, the anticipated news on Tesla's Q3 deliveries and sales is probably going to be another catalyst for its stock price. Wall Street anticipated revenue of $16.521 billion and quarterly earnings of 1.81 cents per share. Due to the fourth shutdown of the Shanghai Gigafactory, there were only roughly 250,000 deliveries as opposed to the much higher number that was anticipated. Fortunately, Tesla's quarterly financial report exceeded expectations in terms of both earnings and revenue. Despite the challenging quarter, the business announced revenues of $1,693.4 billion, which were nearly $400 million better than Wall Street anticipated in terms of revenue and earnings per share, $2.27. The majority of Tesla bulls are very positive about what will occur in the third quarter of this year, because Tesla was able to survive the most challenging period. But what do you think? While you're still here, click on one of these two videos on your screen and let us know what you think in the comments below.